Good evening, everyone, and welcome to the second last session of Entrepreneurship 101 this year. We have one of our most popular panels tonight, which is talking to VCs about what they're looking for when they're investing in startup companies. So it's a really important session today that will build on what you learned last week from Shirley Speakman about what the terms of investments are, and open up your options for different ways that you can fund your business, between starting with a bootstrapping and, of course, the long range sort of TSX type, getting into being investment there. A couple announcements before I introduce the panel. Marielle mentioned last week that we're reaching the end, so we're doing the Entrepreneurship 101 certificates. If you could bring your stamp card to the registration table at the beginning of the lectures and fill your name and email address on the sheet, she will be able to put your name on the certificate, and you can pick it up the following week or at the Upstart competition on May 30th. Again, the eligibility is that you need to have attended 20 or more lectures in person or via the webcast. One thing to note, next week we will be announcing a new funding program that we have been working very hard to have Entrepreneurship 101 attendance be eligible for this funding program. So I can't answer any questions, so don't come at the end. I will have Lily Liu, who is managing the program at the Mars, and come and speak to you next week. It looks like what the program is in brief is that if you've attended Entrepreneurship 101, 20 lectures and gotten a certificate, and if you attend one of our our workshop series that has 3 sessions, you have reached the educational requirement for up to a $30,000 matching government funding grant. So more details to come. Again, I don't have all the details, so I won't be able to help you today. I just wanted to let you know there's a heads up. We've just got a new information about a new program, and come next week to learn more. And with that, I would like to introduce Barry Jacure. We've been talking sort of along throughout the year about the services that Mars offers, everything from education to market intelligence to advisory services, and of course funding. And as part of the funding offerings here at Mars, Barry manages the Investment Accelerator Fund, which is a seed fund that helps early stage Ontario technology companies bring their products and services to market. So they've done a number of investments in the last couple of years and achieved some really great successes. The IAF provides up to $500,000 in an equity investment, I think a convertible debenture. Barry has over 25 years of experience in senior management positions in venture capital, private equity, and operations. So he's very well positioned to serve the IAF program and its investee companies. And we're really delighted to have him moderate the panel today and to bring on 3 members of the venture capital community to give you guys a real sense of what they're looking for and how to reach out and communicate with them to best help you get investment for your company. Welcome, Barry.
Thanks, Carrie. Thank you very much. As Carrie mentioned, I'm looking over the Investment Accelerator Fund, and we are always looking for early stage investment opportunities, so I'll be contributing a little bit to this. But we actually have 2 venture capitalists, and we have 1 entrepreneur, former venture capitalist on the panel. But rather than go through the traditional introductions, because I think their bios are on the website, or you have some information, I'm just going to tell you a little bit about how I know this cast of characters, and so how I came about to meet them, why I have a great deal of respect for them. First, on my left is Duncan Hill, who's the general partner in Mantella Venture Partners, and I was actually with Ventures West trying to make an investment in Duncan's company that he had helped found in Think Dynamics, and I was on the subway actually heading down to present my term sheet. I don't know if Duncan remembers this, but we got a call from Duncan basically saying, don't bother coming out, something's happened, we can't talk to you about it. And he was in the process of selling his company to IBM actually. And so a successful entrepreneur who has come into the venture community and offers a lot. Deep technical knowledge, I learned a lot. Duncan became an entrepreneur in residence at Ventures West, and he understands the technology, but understands how it addresses the market and really commercialization, and he takes that into doing his work at Mantella. Rick, I know, and he doesn't remember this, I'm sure, but I met Rick at upstate New York at a conference with IBM, and he just joined JLA Partners, and he was a bit of a brash character, pretty outspoken, tech savvy, very noticeably different for a venture capitalist, but noticeably different in a good way. Rick's gone on, he was a partner at JLA, he's gone on to found his own company, Fixmo, and he'll tell you a little bit about that a little bit later on, as Duncan will tell you about Mantella. And Derek, I'm not sure where we first met, but Derek also has an operations background with Bridgewater Systems. And what I liked about Derek when I first met him and worked on a deal with Derek was that he has this empathy for the entrepreneur. He knows what you go through. He's run his own company, but he's also very tough and demanding because he knows what can be accomplished because he's been in that operator role. And he has a respect of all the investee companies that I know that he's worked with. He has a lot of value. So I think we've got a great panel. This is sort of the new breed of venture capitalist and their entrepreneur background that they bring into the venture capital community, and they really can relate with the VC. So I'm going to let each of them tell you a little bit about their companies, and then I'm going to start asking questions, and we'll go from there. So Duncan, why don't you tell us a little bit about Mantella?
Thanks, Barry. Is this, it's working, great. Yeah, thanks very much. So Mantella Venture Partners is a fairly new fund. It's been around for 2 years. We're early stage seed fund. We're a $20 million fund. We invest in technology companies that can get to market pretty quickly and start testing their businesses in market. We've made 7 investments to date and sold 2 of them. Push Life sold to Google last year, and Brave Commerce sold to Rogers about a month ago. And then we have 5 companies still in the portfolio, and 4 of them live in our office. Actually, all of the 7, 6 of them have lived in our office. Our latest one is only there for part of the week. So that's new for us to not have them there every day, but they're pretty seasoned entrepreneurs, so we're pretty comfortable with that. We're a really hands-on model in the way that we do our investing. So we come from the entrepreneurial side. We can't help ourselves but get involved. So and hopefully that's valuable to the entrepreneurs that we work with. So I'll hand it over to Rick.
Okay. So thanks. As Barry said, I'm a recovering venture capitalist. So I did that for 9 years and co-invested in stuff with these guys, and just decided that I wanted to stop being in the spectator sport business and go back and build some company stuff because it's a lot more fun. And as Duncan pointed out, it's in the DNA to want to like touch people's knobs and dials. So I wanted to get my own knobs and dials to stop doing that to other people. So Fixmo got started in July of 2009, and our original product were Fix Mobile. So Fixmo, where it comes from, was the BlackBerry device. Has a lot of things that it doesn't do particularly well, and there's a lot of gaps in it, just like any operating system. And we built a set of tools to put on that device to sort of be Norton Utilities for mobile. And so we sold about 75,000 copies of that thing, and I started the company, seeded it, it's like $150,000. Guys over at Extreme matched it. Took us another round of $1 million from Rowe. Had another $1 million come in from the guys Inovia, and then had a larger round with folks from Panorama in the Valley. And then the last round we just did, we raised a total of $30 million. So we've had 41 in the company. So $30 million came from Kleiner Perkins, which is a small fund in the Valley. The guys at Horizons, which own Hutchison Waipu, which is the big Chinese, they own all the carriers around, about 20 carriers around the globe, and then all the existing investors. And we did that because we evolved from that little product to a security suite that we do now, because we exclusively licensed some software from the U.S. National Security Agency, which is a little small startup government agency in America. So we got some technology from them. We built some security software. We've been selling it to militaries and governments around the world. We've now got a commercial version of that for mere mortals, and we continue to do that. So I've been on both sides of the table. The guys that put money into the company were sitting on boards with me. So it's been a pretty good dynamic, and I'm happy to sort of give you lots of more of that detail.
And so if Rick's a recovering VC, I'm a recovering operator. So I've been a VC for just over 8 years. And prior to that, I was an operating guy, and Barry actually introduced me as an entrepreneur. These guys are actually real entrepreneurs. I'm not an entrepreneur, I'm an operator, and the sort of differentiation is I've never been smart enough to actually start my own thing. I always go into other people's things and try and help them figure it out. And so currently I'm with Omers Ventures, and we're a new venture fund in the country. We're just over a year old. I joined there in November, and we are focused on Canadian technology companies that disrupt both the enterprise and the consumer computing experience. and you'll see us be very active over the course of the next 10 years, hopefully. We've made a couple of investments so far. We've invested in a company called Wave Accounting that does free accounting, think ACPAC for free, on demand. And we recently announced a fairly large investment in a company in Vancouver called Hootsuite, where we made a $20 million investment. So we're investing right from seed through late stage. And our intention is when we invest in a seed company, we plan to, assuming they meet their milestones, follow them through their entire life cycle. And we're very excited about being part of building a whole suite of billion-dollar companies in Canada over the next 10, 20 years.
Gentlemen, thank you very much. So I'm going to start with a really basic first question, and Duncan, I'll have you start it off. But yeah, I'm an entrepreneur, and I think out here in the audience, I've got to have an idea. I've been working on it. I've sort of tapped out my friends and family. I've got close to product. How do I go about finding venture capital? What should I be doing? Do I go to Angel List? Do I hire an agent to help me out? Do I do this on my own? Like, where do I start? Just give me some insight.
So, you know, I think one of the great places to start if you're truly new to it like that is find a really good advisor, somebody that's not an agent, not someone who is in the business of trying to raise capital for you and wants to take a cut of that. That generally doesn't go over very well with venture investors anyway. But find a really good advisor, someone who's been through it before, someone who's raised money, who's built a company, someone who believes in you, believes in your business, and probably has contacts into the venture world. I think that's probably one of the best things you could do as an early stage entrepreneur.
And Derek, approaching OMERS, what do I have to do to get your attention?
Well, I mean, I think the first thing is when you approach any venture fund is go to their site and look at how they present themselves and what markets they're interested in, and look at their portfolio and see whether or not the investment strategy they have is relevant to what you do and their portfolio is relevant to what you do. And with us, it's pretty simple. If you're a technology company that disrupts the enterprise or the consumer, we're definitely gonna interact with you in some way. But if you're a clean tech or a life sciences organization and you reach out to us, there's not going to be much of a response because it means you didn't bother to go to our website to find out what we actually do.
Okay. Is it if I get a no, do I just go on to just keep going through different VCs, or is this an iterative process? Do I sort of continue to work with the VC, or what do I expect on that side?
I think the first thing I'd say about that is, and I try to say this to entrepreneurs, and I guess because we're VCs, they think we're I don't know, we're so smart that when we say no, it means your business is a bad business. When we say no, if we say no, it doesn't mean your business is a bad business. It just means either it doesn't fit our strategy, we're not smart enough to figure it out, and so don't get discouraged if a VC says no, but do ask the VC, because we have a responsibility to you to explain to you why we say no. And certainly from our perspective at OMERS and my personal perspective, I'll explain to an entrepreneur, here's what it takes to fit into our investment filter at the seed stage, at the growth stage, and at the late stage, and here's where we see a hole in that criteria for you guys to qualify. Explain to me why I'm wrong, and/or if I'm not wrong, go away, and if you're interested in working with us, fix it or change it and come back and see us in 3 months, because we're always interested in making sure that we don't close the door completely. And if I look at my career in venture over the last 8 years, and I've invested in 8 deals, and actually one just exited last week where we sold Vericent Software. My other portfolio sold Vericent Software to IBM. I said no to the founders of Vericent Software 4 times over a 12-month period. But I didn't just say no, go away. I said no, here's what's missing. And they would come back. And then I would say, okay, here, we got that far. Now here's the next bit. And then we were fortunate enough to invest in that business. We were the first institutional investor, and it's been a very large success 6 years later.
When we did, my best investment was Sirit, and I said no to Sirit 5 times. And had them come back. And part of the problem is that it looks like we're putting people on this endless treadmill, but we're not. Like it's very important that these plan of what we're trying to do is what we're trying to do to return an investment capital back to our LPs. And you're our customers to the extent that we're buying your services in order to return that IRR back to those people. So when we said, yes, this is the box we're in, and we think that if you were doing A, B, or C, it fits that box, but we're not telling you to do that. We're just saying that's the criteria that we're using. Guys would come back and do it, and that happened to be the best IRR I had in the 9 years that I did it.
Rick, just a thing, you've raised capital both here in Canada and the U.S.
Yep.
Any significant differences that you can share with?
Absolutely. First of all, Canada's when I compare, so first the disclaimer is I'm an American living here in Canada, and I'm landed, so grass is always greener, but clearly Canada is a better place to build a company, without question. You have the SREDs, you have this that simply doesn't exist in its form in the United States. You have the approachability. There is no venture capitalist in this country, personalities aside, of the range of those personalities that you can't get to, that will generally answer their own phones, that will generally take an email or a phone call or a meeting from somebody that's sane. And in the United States, you can go, we could give you a list of websites that you could go to VC funds in the United States that says, there's one VC firm that says on their website, we don't have our address on here because we want you to work to find out where we are. It's on their website. Absolutely true. There are others that say we only talk to people that are referred to us. So if you can find someone that thinks you're worthy to talk to us, right? Canada, I've seen them, I know them all, I've seen them all, and nobody does that in Canada. It just doesn't happen. So for sure it's approachability. The second thing is that there actually is money in this country, and we constantly see all the gloom and doom, but you're looking at somebody that could start with $50,000 and take you to $100 million. Like, that's pretty good. And you've got somebody that's publicly saying, I'll take you over the finish line, milestones and all that. So that rarely happens. These guys get into the blocks. We're here, we're late stage, we're early stage. Here's somebody that says, bring the napkin in, and if I like the napkin, I'll take you over the finish line, right? That's a huge advantage. You have guys here that are saying, I'm willing to work with you. And again, the hands-on jokes aside, but the seriousness that you saw in that clip, scientists don't have a clue about how running a business. Well, if you have a really good idea, you have the opportunity to go sit in somebody's office and learn it. Canada's a nicer place to do business. Just people are nicer. So I think that overall, it doesn't take a rocket scientist to come to that conclusion. It's a better place to go, and I think you'll find it's a lot less friction. Guys here knows probably won't agree with me, but I will tell you, statistically, it's a lot easier to raise capital in this country than it is in the United States.
I also hear a common, I guess, a theme right now about capital efficiency. Everyone's saying, it's just great. I'm looking for capital efficient companies, but if I'm the entrepreneur, what does that mean to me? I know I'm watching the pennies. I'm not taking any salary. You're just telling me I've got to bootstrap this longer and slower. I can't grow my business as fast as I'd like to. Duncan, I mean, you guys you look for capital efficiency. How does that help me grow?
I'd like to think that no investor's looking for capital inefficiency, but I suppose there's grades of capital efficiency that we're looking for.
There was a time.
There was a time. True. I think for us, one of the things that we're looking to do as early stage investors is to create as much value as we can off of limited early stage resources to find product market fit and really create some value for the entrepreneurs and for us. And one of the things that we do when we invest is we jump right in with the entrepreneurs. We get aligned with the entrepreneurs, invest in common shares alongside them in pretty much every case, and make sure that we're all rowing the same boat in the same direction and trying to create value for the company and the shareholders, who is us and the founders. But I think the other thing that's really important about capital efficiency is giving yourself options as you move forward. If you're burning through your cash fast and you're not hitting milestones that are significant enough to increase your value or get other investors involved, you end up having no options when you need money, and there's nothing worse than having only one option when you need money for a company. So I think capital efficiency for us is about those two things.
Cool. Okay.
Yeah, I totally agree. It's about in relationship to the milestones that you've set out for your business, and so there's no formula, universal formula for what does capital efficiency mean. It's different for every company depending on what you're doing and who you're doing it to.
I think it's a little bit of a myself. I think seeing companies from back in the late '90s, early 2000 era, capital efficiency is really not a new thing. Capital efficiency is maybe going back to the way business has always really been, and not wow, we raised money, so we're all going to give ourselves $200,000 salaries. I'm going to immediately put out requisitions to hire an 8-person management team. I actually don't know what all of them are going to do yet, but I'm told that I need to have a VP of this and a VP of that and a CFO. And I'm like, a CFO? You're not generating revenue yet. What the hell do you need a CFO? Well, every company's got to have a CFO.
Okay.
It's a movement away from that.
So I guess the thing I'm going to ask is I'm going to ask what you look for, each of what you look for in investment opportunities. And I know I'm going to get some of the standard stock answer, but some of the things that what you wouldn't normally hear from a VC, or what's important to each of you as far as what you look for in a deal or in an entrepreneur. Derek, you want to take it?
So, I'll give you all the stock sort of stuff first. That's kind of the ante into the game. We look for large global markets that the company's uniquely positioned to deliver value in, and the entrepreneurs have a keen understanding of the competitive landscape, whether that's changing how things are happening, existing, and how you're going to affect change, and why you're uniquely positioned to do that. I mean, that's kind of the obvious part of what venture capital is. But what we do when working with teams and meeting teams is we spend a lot of time with the teams and make sure that we're working with teams that have 3 key characteristics, because generally whatever your hypothesis is about the market and how you're going to go after that market and how you're going to position yourself in that market, I don't know, 8 times out of 10 you're wrong. So you got to spend some time getting comfortable that you feel like it's at least a reasonable hypothesis or a couple of them. And so because you're wrong most of the time, we spend a lot of time, oftentimes 3 months, 6 months, getting to know these entrepreneurs, and we look for 3 key characteristics. The first one is pretty obvious. They have to have an incredible amount of drive, because building a company is a 7/24 job, and you need to understand that up front, that this is not going to work for IBM. This is a all-consuming experience that's going to last for upwards of 10 plus years. So you got to have a lot of drive to be able to live through that. The second thing is you have to have endless creativity in terms of the way you think about your market and the way you package your company and your products in that market, and you constantly have to be thinking about that and iterating on that as you realize you've made a mistake in one aspect of how you're positioning and packaging your product for that market. So that's really important, that creativity. And the third one is, of the 3, they're all important, but the third one is the most important and the hardest to find because it contradicts the second one, that endless creativity. You have to have equal endless capacity for critical thought. And what that means is you have to make sure that you're constantly challenging yourself, that you're not talking yourself into that latest package that you've put together is perfect. This is the one that's going to break through. You have to always be saying, is this a false positive? Is this really working, or am I just trying to talk myself into it because I'm really freaking tired? I've been at this for 3 years. And so those are 3 characteristics that ideally we'd find in an individual, very, very difficult to find in a sane individual. And so generally it turns out to be the characteristics that we look for in a team.
Rick, your key things?
So I would probably echo most of what Derek said. I can tell you that one of the most important things an entrepreneur has to know is when to cut the losses and not continue down a path that is capital inefficient, for one, and 2, the dogs aren't eating it. And if you believe so much in your own Kool-Aid and the dogs aren't eating it, you have to have that ability to try to figure out why and change. The worst investment I ever made was a company called Music IP. Yeah. Right? Right? And it wasn't his fault. Moi's fault. You're all anybody in here familiar with Pandora? Right? Okay. I had Pandora 3 years ahead of them. We had the greatest technology on the planet, and we had the business model wrong. And we could not get out of our own way to realize that the business model was wrong. And the team kept telling us over and over and over again, and I think we replaced the CEO twice to get there, and we blew it. And it was because we didn't have the critical thinking to understand that we were throwing money at an idea, the dogs weren't eating it. And we kept getting people that were either telling us what we wanted to hear, which was fatal, or we could not take that step back and say, okay, pivot. So I'm sitting here today being so far, knock on wood, successful at Fixmo because went down the path with tools. So we had this product, the Fixmo Tools product, we were getting rave reviews. We had 75,000 people in the beta on Crackberry. People were telling us we're the greatest thing in the world, and we said, okay, we are going to be the first company in the world ever, in the history of the world, to charge $19.95 for a download on a BlackBerry. The deafening silence you hear in this room was what happened. And 2 weeks into, oh, shit, we switched immediately. We dropped it to $9 and says, we got to find another business with our security stuff because we cannot sell this to end users immediately. And fortunately for us, we were talking to the NSA, we sped up that process, we spun on it, we got this product going, we shipped that product. And the government said, yeah, we'll spend $200,000 on that. And we were smart enough to know, but no corporation is going to do that. We've got to find where it's compliance, where they have to do it, where the government's making them do it. So we're going back and forth. But we didn't get arrogant about the $19. And that's what happened to Music IP is we did not make that immediate pivot.
Yeah.
And that's the key thing, I think, that venture capitalists, they are, at least I'm getting the feedback from my own guys on board. It's like, that's why we invest in guys that can do this to get to the finish line as fast and as efficiently as possible.
Duncan, anything to add? You guys go very early, so you actually partner with people.
We
so
go very early with partner. Look, everything that they said, I agree with, and I think the things that we're often looking for on top of all of that, and Derek's clearly given some real thought to bucketing those kind of the traits that they're looking for in an entrepreneur, and we tend to spend a lot of time working with the entrepreneurs even before we invest, and actually get involved in trying to help their business and get them in working with us sometimes even before we've invested. And we're looking for an entrepreneur that has all of those characteristics, but that's coachable. Someone that's pretty pig-headed, can't listen to reason, can't be challenged, gets defensive if their ideas are challenged. That's a real problem, and that's almost a no-go for us. And we're looking for. There was another one I thought of there that was sick kid at home. I'm really tired.
It's okay. It's all right.
It'll come to me. But there was another one that I thought was pretty important.
Yeah. Well, what
sorry.
Yeah.
I got it. Came back. Two other things. They've got to be able to hire really well. They got to be able to attract great talent.
Yeah. Yeah.
And we're also looking for someone, as a first investor in, we're looking for someone that we think, can this person could they go and raise money without us? Because what we don't want to do is be putting money into the founding team that you look at and you say, we can't set them out to somebody, the next round of financing, how are they going to do it? They're not going to get there. So right away you're talking about needing to augment that team.
Yeah.
Right at the gate. We're really looking for a founder that can pitch their vision, that has market vision. And I guess that would be one more thing too. You see a lot of these really early stage companies where they've got great product vision, but they completely lack any vision of the market and how they're actually changing a market, disrupting it, how they're going to get into market. And that's actually not an easy thing to hire into a company.
Yeah.
If the founding team doesn't have that, we found that hard anyway to.
But it's interesting, the sense I get from all three of you, though, that this really is, and we talked about it earlier, it really is an iterative process. So I think what you want to do is you want to be in touch with
really
VCs.
about the people.
You want to be working with these guys and staying in touch with them all the time, even if you do get that no or get turned back. I mean, you want to be able to keep in front of them as you continue to make progress. One thing that
But to that point,
Yeah.
that is why, in my opinion, based on experience and et cetera, that's the advantage Canada has, because you can stay in touch. When he says,
Yeah.
be in touch, I'll be in touch, and when he says it, they actually mean it. Like it is a true statement, and you can get the time out of these guys that can help a business grow.
So, the big trend that's happening right now is, and I want your opinions on this, and sort of, I'm the entrepreneur, I'm reading it, there's a number of incubators that are started up. I got Grow Labs, I've got the one in Montreal, Founder Fuel, Extreme Labs has started one here in Toronto, I've got DMZ over at Ryerson, Communitech starting up one, Hyperdrive, we're doing something here with Mars with Jolt, and it comes in where I look at Y Combinator in the US, and I see the valuations I can get if I graduate from that program. So are these great programs? Should I be signing up for these? What should I expect from these programs? Am I going to see the great follow-on financing if I successfully go through these programs? So Derek, any thoughts? Are you involved with this? I think Omers is involved with a couple of them. So what are your thoughts on them? What do you recommend to me as an entrepreneur? What should I be doing?
You know, I think they're interesting programs, and I think that they should be, that entrepreneurs should look at taking advantage of them, but don't think they're magical. Don't think that by going there and coming out the other side that all of a sudden, you know, even Y Combinator, as great a brand as it is, the only guys that get premium funding out of Y Combinator are kick-ass guys that took full advantage of the resources they had in that program. So, and they're a good company. So don't think that by going there, by getting in, is the actual end of the process. It's actually how much you take advantage of the resources that are available to you, and that you take that, whatever it is, $30,000, $50,000, and come out the other side with something that's meaningful and a crisp story about what it is you're going to do. Because I do think there is this perception growing that people are like, man, if I get into Y Combinator, I'm automatically going to come out the other side and be credible, and that's just not the case.
And I kind of look at them a little bit, and I don't have an MBA, but just my wife does, my partner does, and I've talked to a lot of people that have looked at MBA programs, and they kind of say, you know what, the MBA is really as valuable as the school you go to. And I do think that there is something in that as well with these programs. You really need to look at who's involved in it, who's running it, what are you really going to get out of it, and because they're not all created equal either. I mean, I think, as much as Y Combinator is not guaranteeing you success, being in Y Combinator, expecting that you're going to get the same from, every other program as Y Combinator because it's got the same semester structure isn't necessarily the case.
Yeah, I think, and I was just going to say, actually, Y Combinator could be considered the Harvard of the program. But the interesting thing about it is, and what I would encourage people to do that go in them, is the reason Harvard is such a compelling school is, it's got great curriculum, and you're going to come out of there with a really quality education. But what I've learned about the Harvard Mafia as I've gotten to know them over the years that I've been in this business, the most powerful thing about Harvard are the people that you meet there, and the extended network that exists as a result of you. So I don't know that this is a code, but basically, if you're a Harvard grad and you get a call from a Harvard grad, you're going to return that call. And so leveraging the network and building out your network while you're in these combinators, Y Combinator being that sort of, call it the premium one, because one of the things we do a really crappy job of as Canadians is exploit networks. And so that's something that these people think about, sharing ideas. The power of being in an incubator, or the power of being in a place like Mantella. You walk around Mantella, where there's all these companies that are in their early stages of their lives. These people are sharing ideas, they're learning from each other. They're in totally different markets. They're doing totally different things, but they're still learning from each other. And that's something that I think that people that go to those, and again, like I said, fully exploit them, that's what they should be doing, a big part of it.
Yeah, I really agree with that as well. I really think it is the network. I think if you even look at why the success in the U.S. and Silicon Valley, it's the culture that you're with, and I think we see that happening here in Toronto, where there's a lot more of that going on. So I think the incubators, from that point of view, of increasing network, allowing companies to interact with each other, share space, it can be very valuable. So what I'm going to do, I'd like to open this up for questions from the floor, because this is really, I want you to be able to ask what is of interest to you. I've sort of touched on a few topics here today, but looking for things from the floor. We have microphones that you can step up and ask a question. So any questions from the floor?
Hello, my name is Himi Syed. Just the point you were talking about the incubators. There's the Center for Social Innovation here. They're expanding with a few other locations. There's some other models like that across the country. It's not exactly venture capital in a entrepreneur sense for a technology company, for example, but it is using those principles and those ideas, which is the point you just raised. They're not doing the same thing, but they're learning from each other. What have you learned from the social innovation space that you might not have come about through just simply technology investments?
Wow.
I'm not sure what social innovation is.
Yeah, so it's more of a Mars-specific question he's asking. So within Mars, there's a group that focuses on social innovation. So they're looking not only at just the financial returns to companies, they look at the social impact of investing. So there's a whole area that's coming up on social impact investing, where a number of corporations and also individuals are really looking to put their capital to work in areas where there's a return, but there's a social benefit as well, and that's what you're getting at. I don't know if there's a lot. It's interesting. It's interesting to ask that question because you've got a bunch of venture capitalists up here that there's not that tight a relationship between the two. They're pretty isolated. It's a bit in a silo where social innovation, because they're not totally driven by financial rates of return, we don't run in the same circles. So I'm saying there's not a lot of shared information between the two. That being said, I just spent some time today with someone from the social innovation group, because they are working with Royal Banks. Just announced a fund that they're looking at in this area. TD Bank is looking at something in this area. So there are people coming forward, and I think there will be that sharing of ideas because people do want to see both the financial return as well as the social return. But I'm not sure we're going to answer your question very well.
I actually have a strange sort of intersection point here, and it's weird that I have it because I'm like the least socially innovative person on the planet. But recently looked at a group of VCs in the country have looked at putting together and we're copying from various places around the world where these things exist, where we're bringing in a template for young entrepreneurs to start a whole, I won't do this all justice, but a whole social conscience of the business in the early days. And they can take a small component of the equity when it's not worth very much, and they can set it aside, and then they can roll out a template so as they recruit and grow teams, they can decide what kinds of social programs they're going to get involved in. You know, United Way is a very large company kind of thing, but the younger workforce that's coming in has a much greater social consciousness than a dinosaur like myself. And so we're actually looking at it for two ways. One, to give back to the community as companies have success, but also actually from a practical perspective, use it as a recruiting tool because people that are coming into the workforce want to know that they're working for an organization that means something more than, creating a great product or making money. And so hopefully we're going to get something like that off the ground in the next, in the next 6 months, certainly in Canada.
I would say as well, just, there's whole classes of internet and technology businesses that make a lot of money that you won't see any of the funds that we've ever dealt with invest in. So there's already a whole lot of stuff that gets carved out because it's maybe not going out of its way to benefit, because it's actually something that is potentially being perceived as detrimental in some way. And then, we all get to look at the things and invest in the things that excite us. I know for us, being so hands-on, we only can do a few deals a year. So when we're looking at things that excite us and things that have social benefit excite us, we're bound to spend more time in looking at those. But it's probably not quite what you're looking for.
Next question.
Sorry, it's hard to think this question through. You guys have met a lot of entrepreneurs, and you probably have a lot of stories. But what sort of stories can you tell me about entrepreneurs that think disruptively? Like, how do they do it? And how can examples of that?
Think disruptively.
So you're an entrepreneur. You thought disruptively. How did you do it?
I don't know if entrepreneurs, at least back when I did it, it wasn't a Actually, it's funny you say that, because now with some of these, you even look at Y Combinator now, they got the no idea sort of stream. These are people that sort of see themselves as startup entrepreneurs first. They don't even necessarily know what they're going to do. So maybe they are actually thinking about, how do I think disruptively? I mean, I know for the company I started, it was just purely, I had a services business and was solving a problem and realized this shouldn't be done one-off. This should be built into software and sold, and there's this huge inefficiency. And if that, that turned out to be cloud computing, and it was fairly disruptive. But I'm not sure I was thinking that way.
Kind of like,
I think
in the middle of the road, I need to move it.
I think people generally that I find that are disruptive share a couple of characteristics. One, they're generally cranky people about society norms. So, for example, we're looking at this, right? There's, 4 of you there, 3 of you here. A disruptive person is thinking it's the most frickin' inefficient thing in the world. We got 7 people here. There's a stupid clock timing down, and we're never going to get their message. There must be a way to queue up those other people while he's thinking about it, so he can get these messages more efficiently. So that's a little melodramatic, but that's the point, right?
There's Quora.
That's the point, that people are constantly doing. You look at a line, you look at somebody making a sandwich, you look at anything, and you just think, this
Better way
is
to
just
do it.
stupid.
Unhappy with inefficiency all
and
the
people,
time.
these people are constantly unhappy, and they see something, and it sounds weird and funny, but it's like, oh man, and they glom onto something and say, I can fix that. And then they barrel through every objection, they barrel through everything, and then you wake up and go, well, why? How is that possible?
I'm one of those impatient guys, so I'm going to ask another question.
That's it.
Question.
Yeah, hi there. One of the questions that I think keep coming up and up when I'm thinking about this and when I'm hearing, it's very important to build a team. So you hear so much about how we get money, but what kind of things, I guess, especially in the early stages, how do you sort of attract talent or share these ideas? Because you're pretty skeptical of who do you share ideas with. So how do you go about sharing ideas and trying to find like-minded people to make your magic happen?
Don't be skeptical about sharing ideas.
Okay.
First of all, it is a complete myth that people will steal your ideas, right? I used to work for Microsoft, and everybody used to think
stealable, it's a crappy idea.
If it's like,
No, I mean,
I used to
more
work for
attraction.
Microsoft. Big companies can't get out of their own way to steal your ideas. That's a fact. And little companies like this, we get excited about talking to people, and all we're doing, we're just watching your body language. You start leaning in, going, "Wow, that's cool. Gotcha." Want you excited on my
more
thing.
in line to attracting. I mean, like, where do you go to find? Because I mean, if you're not open to many circles of different types of talented people, I mean, what kind of places are? What kind of sources would you?
Canada,
I mean,
geez, it's like
here
the Tuesday.
in Toronto, there's
Toronto. You got a whole room right here. He's
I
got an
think,
idea. Go talk to him.
Startup drinks.
you could go to Sprout.
Startup drinks.
Startup drinks. You could go to Sprout Up right after
Sprite,
this.
yep,
It's
Sprout Up.
actually on at 7 after this.
Demo camp.
Demo
camps.
camps.
Demo camp, yeah.
The hackathons.
Hackathon. There's all sorts of events
Yeah.
in Toronto.
Yeah, just network,
that you can go to.
talk. Yeah.
Startup drinks is every month, and it's a
Founders
great. There's
and funders
usually
dinner?
founders and funders
And
dinner once a year.
you'll know when you find somebody that you think is going to be a great team member when they get more excited about the combined
you do.
idea than you were when you started the conversation.
Correct.
That's how
Yes. 100%.
That's how the click starts to happen.
Spiral up.
Well, thank you.
Next question.
When you're approached by startup companies, how much emphasis do you put on IP? And particularly for a lot of bootstrapped web businesses, I know it's pretty challenging to amass a whole portfolio of patents. Could you share a few thoughts on that?
I mean,
Go ahead there.
when I first got into venture 8 years ago, one of our top 3 things that we had to talk ourselves into before we made an investment, there needed to be deep IP. Today, it's not even on my radar screen. It's about the market need, and it's about the team's ability to exploit that market need, and the just an example. So Ripple was an investment that I made in September of 2008. And with really experienced founders in the human capital management space, and we worked with them through beta, and they're very experienced founders, and they wanted to maximize the value of the company, and there was literally like this much, a thin layer, like a what do you call it, like wax paper layer of IP. That's how deep it was, and it was a pure execution play. And we just said to them, look, guys, we either start executing on this now and become the market leader, or the world's going to pass us by in 6 months. And that was the company we sold to Salesforce in December when they decided they wanted to get into the HCM space.
Yeah, the world's changed. I don't think it's as important as it was.
If somebody comes with super deep IP and it's really compelling to the market, hey, that's great, but it's not, to me anyway, a big deal.
Question?
Hi. Over the last couple of weeks here, we've been exposed to various points of view, including people that say, you got to bootstrap as much as you can, and here's the concept of a VC and term papers and all the things that are expected of you, and they may be hands off. What I'm hearing is a sort of kinder, gentler version of VC, coming in at seed level and wanting to be hands-on, that almost sounds like more of the qualities that I've been told are something you'd find from an angel. Could you go a little bit into whether or not this is something that is evolving, and what now is the relationship between, say, a seed level VC and an angel?
So let me say this about angels versus VCs because it's really, really important. An angel is a more formalized grandmother. Okay? And not much more than that.
Grandmother with paper.
Yeah, right? Grandma will give you a kiss and a check. You'll get the check, the kiss, and a legal paper from the angel. VCs are much more institutionalized. He's institutionalized even though he's a kinder and gentler version, but he's got LPs, he's got things that he's got to do, he's got an IR matrix that he's working off of. Angels, it's emotional, it's wow, this is cool, wow, I like you, all of that sort of stuff. What you're seeing here is in fact the norm, it is, but it's disconnected from that versus angels or the relationships. These guys are dealing with the bench strength to take them up to the next level. The angels.
But you are seeing a much different venture capitalist from when I was the VC, because it was more of a financial type. It was more returns, and here you are really working with entrepreneurs, operators that can empathize with what you're trying to do, and I think they're better VCs. It's a new breed. Georgian partners that I put them in the same class. There's been a number of people that have come out and raised new funds that are from an operations entrepreneurial background that puts them closer to angels from that viewpoint. But as Rick's saying, very structured still and very disciplined and can really help you, I think, a lot more.
Yeah, and just one last thing on that, just because VCs they're not automatons, right? They're human beings, and there's good human beings, and there's not good human beings. And just in the same way you feel like you're going to be evaluated by a VC to see whether they want to partner with you, you need to evaluate the VC, and you need to do a little bit of work and reach out into their portfolio and ask CEOs that they've worked with, or seed stage guys like you or women like you, how they're like to work with. Like, do the work on the other side of it as well as what you're expecting from us.
And nice doesn't mean we're not going to push you really, really hard and
Just
expect
nice.
a hell of a lot from you.
Because it's the best thing.
But we're going to roll up our sleeves to help you try and get there. But the expectations are there.
Yeah.
Barry, I just want to jump in with one
Okay.
question from the webcast. This is actually for you. So looking at the IAF, Naveed has said that we are a seed stage medical device company raising a non-trivial amount to build an alpha prototype for human testing. The VCs are telling him that they are too early for him. They've got to build a prototype first. So he's not coming from an academic institution and finding it difficult getting government funding because he's not from an academic institution. So would the IAF invest in a medical device company that hasn't built a prototype yet? Does it go that early?
So he's challenged because the IAF, unfortunately, we're restricted to investing $500,000 in a company, and if we just give you $500,000, let's say this company needs $1.5 million to get their prototype, and if we give them $500,000, it doesn't get them anywhere. Because they need $1.5 million to get to their prototype. So what we will do is we'll work with that company and really work hard to try to find investors that we think, or other government agencies that will help round out that $1.5 million. But until we find that full amount of capital that gets them to a milestone or gets them to where they need to get to, we won't invest. So it really is the amount of capital required to hit a certain milestone or get to a certain point. And if it's $1.5 million, then we have to go help you find that. It's just foolish. It's a pier to nowhere. It's not a bridge. We're there to bridge companies. But if it's $500,000 out of $1.5 million, we're not giving them a bridge to anywhere. Who's up? You're up.
You mentioned the importance of finding the advisor at the very early stage. So are there any hints or guidelines? What do you offer this person so that on one side you don't scare future investors, and on the other side, still keep them interested?
Yeah, I say, and not everybody needs an advisor, and I think you need to be careful of advisors as well. But at the same time, if you're completely new to this, I mean, you know, then the incubator type of or accelerator type scenario can be good, or finding advisors that can help you navigate and understand what you're doing can be really helpful. I don't think it's stuff you can learn from just reading websites. So finding advisors, I mean, you know, ideally what you're looking for is probably an entrepreneur that's made a lot of money previously in the industry that you're going into, and getting them excited about what you're doing.
And you can offer them some component of, you know, some equity. It's going to be structured relatively easy, some options. I typically, you know, we've got a regular board, we've got a board of advisors. We pay the board of advisors so we can hold them accountable for things we want them to do. When you get an advisor, you should try to give some, you know, point, half point, whatever it is, of equity and hold them accountable. But to the point, they should be as excited as you are.
Yeah.
And that just is a way to hold them accountable for doing work.
And if I can just add one cynical sort of thing about how to qualify advisors, you should be seeking out advisors. They shouldn't be seeking you out.
Amen.
So people that tend to come to you and go, hey, I'm an advisor and I do things in your space, generally they're a doofus. These are people that you need to look to and go, hey, like that guy or that woman, she really has done what I was going to do. I'd love her. And you need to talk them into it. That's what you want from an advisor.
This is a VC technical term for that thing.
Yeah.
Thank you.
I'll give you a little bit. I'll give Mars a little bit of a pitch here as well. Is that there is an advisory services group here in both IT, clean tech, and life sciences, and they do have entrepreneurs that are have specific industry expertise that can help. So it is one source that you can go to that can give you advice and sort of target you with respect to where to find capital as well. So that's a Mars advertisement. Question.
From the perspective of a business who's looking to get a seed fund or a seed round or a growth round, and it's a consumer app, how do you guys feel about companies that don't have a revenue model built in at that stage?
The great,
Is that kind of expected?
We'll figure it out later model?
Yeah, for a consumer app, yeah.
The ones that get funded that are ones that the product exists and it's, or I shouldn't say, the ones that get a lot of traction from interest from VCs or seed investors are the ones that have been built, generally bootstrapped, and have at least a beta in sight, and they go from zero to X 100,000 users in 4 hours, or 3 million users in 12 weeks. And so Kick Communications out in Waterloo, almost 2 years ago now, was an example of that, where Ted Livingston built the product with a group of ragtag pirates, and they had one direction they went in. They got a little bit of seed money to do it, and then they discovered this concept of BBM for everything else, and the thing took off. It went from 0 to 3 million users. I forget the exact data, but it was, call it 3 or 4 months, and people were literally flying in from around the world to try and fund that business.
And every single one of the consumer apps that you've seen with these ridiculous valuations and all these other things have followed that exact model. There's been virtually no exception to that.
Yeah.
So saying how people feel about it, it's almost, and I don't mean this rudely at all, it's almost irrelevant until these guys, my opinion, not being a VC, pounding on your door because of your growth, your hockey stick.
Okay, so I guess it doesn't matter if you have the growth, as long as you have the growth.
That's right.
Yeah.
It's the growth.
Yeah.
That's right.
Thanks.
Question.
Speaking of Y Combinator, they've been fairly clear about wanting to invest in founders that are teams of 2 to 3, maybe 4. They usually frown on investing in an individual founder, encourage that individual to go find other team members to be founders. How do you guys feel about that? Are you willing to invest in an individual founder, or do you prefer the teams?
You're never investing in an individual founder. You're investing in that ability of that individual to go get more people. It is, I'm living it right now. And the 24/7, it's actually 26/8. And having people that having top talent around me has actually got it back down to 24/7. So you really should have a team for your own sanity. Forget about investing, but it's a team effort to get these things off the ground.
Yeah, I totally agree with that. I mean, I look across the companies that I've dealt with, and the lone founders, it's a tougher go for them. It really helps. I mean, I've got a co-founder in Mantello and Robin, and I wouldn't want to do what I'm doing on my own. But I think that's one of the things that, we do have a lot of lone founders in our group because we become their co-founders, and that's one of the reasons they come to us. Chris Sikornik, who's the founder of Chango, this is his 5th company. It wasn't like he needed someone to tell him how to build a company. He just said, I did the last 4 on my own. I don't, or 3 of the 4 on his own. I'm not doing another one like that. I want you guys there working with me and helping me through all of this, because every one of them, there's so much to learn, and it's a hell of a burden on one person, and you're going to have ups and downs, and it's really good to have that other person to pull you up.
Question?
Speaking of crazy valuation, I think there's a great opportunity for me to get some insight from professionals on what you think about the $1 billion valuation for Instagram, which essentially amounts to about $33 per non-paying user, and that has no business model at this point.
It's 33. The problem is we're all focused on the B word, and we're not focused on there actually was math behind it. Mm-hmm. And there was math behind this whole notion of what can we think we can get out of this customer when we think the value of the customer. So if someone comes to me and says, yeah, it looks like your customers are $1 million a piece based on the revenue model, and you've got 200 of them, okay, thank you. So for me, I understand people going crazy over the B word, but I sort of, there's a math exercise behind that.
Yeah, I think I agree with that, and I think, but it's an anomaly, right? And that's all it is. And the reality is that to build a company worth that kind of money, on average, takes 10+ years at least. And do we all hope as VCs that we're gonna hit that one anomaly? Yeah, but hope isn't a strategy, and so that's not how we build out portfolios. Yeah. And I just think, when people talk to me about it, it's just, that's what it is. It's an anomaly, and good for them and good for the investors, but it's nothing more than that. I mean, was it 4 or 5 years ago, you probably would have said the same thing about the acquisition of YouTube at what was it, 1.5 or 1.6 or 1.8 billion, I don't remember. It seemed crazy at the time. It didn't make any sense to a lot of people.
Math on Flickr if you adjust for inflation.
Yeah, and now I don't think too many people look back and go, wow, that was a really dumb acquisition for Google,
But I think the point is that you can't, as a VC, you hope they happen. You can't. That can't be your strategy to try to only find those.
Hi, I want to just build on the idea of building organizational capacity and build business models. So what would you guys point to in terms of being able to find the right business model at the seed stage, the growth stage, and later on? Do you have any examples that you could point to?
Well, I'm not quite sure if let me give an anecdote here and or just something that we look at a lot. And Derek mentioned earlier about having a hypothesis about your business model and going out and testing that. I mean, that's really what we at our early stage are funding a company to do, is to build hypothesis around a business model and get out very, very fast in the most efficient way possible to test that, to understand what they're looking for that signals success or failure, and then to make really, really rapid decisions about what to do about what they're seeing and moving quickly towards something that's working. Currently our oldest portfolio company, Chango, and that company built 5 products to get to the one that they're at. The first year we went through 5 iterations of the business, and what it is now, I mean, it's in the same general space, but it's almost unrecognizable from what we first invested in. So that was that process.
It's easier at the late stage because at late stage deal, by definition, the business model, at least the core business model that's proven it can generate cash or is on the road to generating cash, is done, and that's what you're investing in, and you're saying now it's about market expansion or better execution, whatever it might be. And then it gets harder as you go down to seed. At seed, generally, you've got 4 or 5 different opinions about how you might make money, but you're not sure yet.
So iteration and just putting the capital in the right place.
Ship it.
Okay, we only have time for one.
Test it.
We have time for one more question. So one more, and then if there's other ones, we will try to you can grab us offline. But another question.
Hi. The points you guys have made are just amazing today, and I guess one thing I'd like to know is what would be the best way to reach you? Because I anticipate at the end of this, everybody's going to want to come up and ask you questions. Is there a way to perhaps reach you on a separate forum?
What a great
At least-
final question. I like that. That's a great final question, man.
You don't need to ask me questions. You got all my best stuff already. So like I'm totally tapped out.
Yeah.
So I apologize because I actually have to get on a conference call. And so my email address is dsmyth@omersventures.com, and you can go to omersventures.com website and you can get a hold of me there. Because I certainly am interested in interacting with you, and I apologize, but I do. Actually, being a VC is kind of 724 too, so I
My
gotta
email
go.
address is dsmyth@omersventures.
Kidding.
Kidding.
My email address is rick, R-I-C-K, @fixmo.com, or if you go to fixmo.com, it's on the contact page. Let me speak to the manager, and that's me. And my value add in all of this is after you get done talking to them, we'll do the BS detector thing for you. No problem.
So,
It's dhill@mantelavp.com.
Sorry, what was that?
dhill@mantelavp.com.
And I just want to make a plug for our funding sources directory, which is in the Entrepreneurs Toolkit. There are also VCs listed in there that you can contact. And if you, Marielle's going to hate this, but if you need these guys' email address, you can email entrepreneurship101@marsdd.com.
But I guess my last question was, I work in the banking and brokerage space, and there is, like, to Derek's point, there's huge disruption that is kind of waiting to be unleashed in the banking and brokerage products and services out there. A lot of these technologies are antiquated from 40 years ago. So we're working with a product right now that, we're really excited to talk to you, three of you actually, about.
Yeah,
potential.
and that's one of the earlier questions. That's where a lot of disruptive thinking comes from. People working in an industry where they're right in the middle of it, and it's clear as day to you because you're living it every day. Versus people looking from the outside in. And so certainly that's something we should talk about.
Okay.
So thank you. I want to thank the panel. Thanks, guys. Great input. I want to thank. I also want to thank the audience. I think you should give yourselves a hand. These are great questions and really got the best out of these guys. My questions were lousy in comparison, so thanks a lot. Thank you.